I'm Jamie Hooper with Remax Crest and jamiehooper.com, and today we're here for another edition of the current state of the Vancouver real estate market. If you get any value from these videos or you're interested and you enjoy them, we would really appreciate you subscribing to our YouTube station or liking this video. So in October, we saw the continuing pattern that we've seen for the last 5 or 6 months in the GDRD markets. Markets are continuing to soften price-wise. They're not, again, tanking by any means, but prices are starting to come down slightly each month. October sales, and this is for the entire Lower Mainland, were 26.8% below the 10-year average. Now, when you talk about that 10-year average, one thing you have to remember is the 10-year average is pretty high. The markets have been pretty busy during that time. So what we're saying is, how I read this, is it's 26.8% below a really busy market. The supply of homes today is the highest it's been in 4 years. And what that does is it takes pressure off of the buyers. Whereas going back a couple of years, when people walked into a property and wanted to purchase it, you pretty much had to make your decision within 24, 48 hours if you were lucky. All of that pressure has come off of buyers now in most areas. Now, there are certain parts of the market that are still pretty active. And to give you an idea of some of those, the downtown condo market up to $700,000 is still busy. You'll still find, in certain instances, multiple offer situations on those, and some of them even selling above asking. The Westside Detached Market's got something really unusual that happened in the month of October. And so for the last 2 months, there have been 47 sales above $3 million. That part of the market has been pretty much non-existent on the West Side for at least 12 to 18 months. Now, the only thing I can think of to explain that is maybe the properties that were $4 million plus have now slid back down, and they're now selling in the $3 million range, and the buyers that have been standing waiting for the market to soften are now prepared to re-enter the market. But what was interesting of these 47 houses is when I pulled up the first 10 of them. I didn't have time to go through all 47 of them, and these 10 houses all sold between $3 and $3.8 million. One very interesting thing, the average, so I went and went and looked up the assessed values of all these homes. These homes all sold for an average of $620,000 below the assessed value. So I thought that was pretty interesting. Now, how would that be? Well, the reason is these assessments were done in July of 2017. These are the ones that were distributed in January of 2018. So that's already 16-month-old information of when the city assessed those things. So I found that pretty interesting to see the high side of the market be that. That's about 15 to 18% below their assessed values that they were selling for on average. So I found that pretty interesting. The Eastside market sales, the Eastside market for detached houses is still pretty good, up to about 1.75. It still remains right on the border of a balanced market and a seller's market at about a 20% list to sell ratio. But once you get above $2 million, it's a 4% list to sell. Or once you get above 1.75 million, it's a 4% list to sell ratio on the east side. And the east side attached market is still real busy right up to, well, the entire east side condo and townhouse market remains pretty strong. Richmond condo market stays pretty strong up to about $700,000. And if you're looking for a detached house in Ladner, the market's reasonably active up to $1 million and slows down when you get past that point. So what's causing all of this? These are the questions that I get asked all the time. Why is this market doing these things? Well, the foreign buyers tax that was implemented in August of 2016 has gone from 15, now it's up to 20%. So, I mean, when you think about that, 20%, if you had to pay that on top of buying $1 million home, that's a $200,000 tax, and that's just on $1 million home that you're going to kiss goodbye and never see again. People always say, oh, but people are rich, they can afford that. Well, my answer to that always is, how do you think they got rich? It wasn't from making, being frivolous with their money. Not to say that purchasing real estate is frivolous, but if there's other options to paying a $200,000 tax, like investing in different cities, investing in different things, I'm sure they're going to explore all their options. What do we got next? So that's the foreign buyers tax. We've also got rising interest rates. This is really interesting, talking about what the rising interest rates and the stress tests, try and say that 3 times fast, have done to people's borrowing power. So since the summer of 2017, we've had 5 interest rate hikes, going from 2.79 to 3.84%. Now, you don't qualify it. For those of you not familiar with what the stress test is, you have to actually qualify at a 2% higher rate. So you have to qualify at 5.84%. To give you an idea of what that means, before the interest rates went up and before the stress test, if you had a family income of $100,000 in June of 2017, before the stress test came into play, and you put 20% down, which would be $180,000, you could afford, you could purchase a $900,000 property with an average income of $100,000. 16 months later, you can only afford, with 20% down, now you can only get a mortgage of $650,000. A purchase price, sorry, of $650,000 and a $520,000 mortgage. So that is a big difference, and it helps, just another thing. All of these things aren't anything that by themselves will kill the market, but the accumulation of all of these things is what slows the market down. We've got increased property transfer taxes as well that applies to everybody. The property transfer tax for years was 1% of the first 100,000 and then 2% of the balance. Well, that's all changed now. Over the last couple of years, it's had a few changes to it. It's now 1% of the first 200,000, 2% between 200,000 and 2 million, 3% greater between 2 and 3 million, and if you go above 3 million, it's another 2% on top of that. So the combination of all of these taxes obviously are slowing the market down as well. One of the things that really fascinates me, and I'll get a little political here, is that the NDP government's projection about their revenues from the property transfer tax. I read somewhere, and I can't remember, and I couldn't find the article today, that they're projecting about a 30 to 40% shortfall in their revenues from the property transfer tax, which blows my mind. They raise all of these taxes, and their budget was like for a 2 or 3% increase. They raise all of these things to slow the market down, and then when it slows down, they're caught by surprise and they've got a 30-40% shortfall. That's going to be coming out of our pockets somewhere else. What else we got here? We also have speculation taxes, empty home taxes, and combining all of this with people with massive householder debt, the highest it's ever been in Canada. Auto sales are down, retail sales are down. It doesn't make the outlook for the immediate future look very rosy real estate-wise. So people ask me what my projections are for the new year. I don't know, but here's what I do know for sure. In my lifetime, the NDP has been in power 3 different times, and all 3 times the real estate market has suffered. Call it coincidence, call it their policies, I don't know. It happened in 72 to 75 with the Dave Barrett government. After that, we saw the late 70s boom. Then in the 90s, when we had the NDP government in again, the rest of North America, all across Canada and the US, were all booming, but not BC. We were dead until when? 2001. What happened in 2001? The Liberals came into power, and honestly, the very next day, my phone started ringing like I had never seen my phone ring before since I'd been in real estate. Then later that year, the September 11th catastrophe happened, and that had a big impact on our market. Why was that so? Well, the Americans, if you remember, I believe September 11th was on a Tuesday, the Americans shut the Dow Jones down until the following Monday because they were worried the stock market was going to collapse. And what they did to offset that was they dropped interest rates a full percent before they reopened it, and the Canadians followed. And then within the next month, the Canadians and Americans both dropped their rates another 1%. So all of a sudden, you could get a house on the west side for, in the low 300s in those days. It was cheaper to own a house than to rent it at that point in time. And that's what made our markets just skyrocket until where we are today with a couple of blips, the 2008 U.S. banking crisis, et cetera, et cetera. So hopefully that's given you a little insight into what's happened with the markets. Again, we'll ask if you get any value or you enjoy these videos, if you would subscribe to our page or like this video or write us a comment. Tell us what you like, tell us what you don't like about what I said, and we'd love to hear from you. I'm Jamie Hooper with Remax Crest and jamiehooper.com, and that is the latest edition of the State of the Greater Vancouver Real Estate Market.